Welcome, everybody. Steven Sitkowski here. Welcome to this week's edition of my Market Insights. Take a look at what's going on, what's impacting the markets, all that good stuff. I want you to know that everything we do here is for educational and informational purposes only. It is not intended as investment advice. So what's moving the markets? Well, Iran says it will not escalate its conflict with Israel. So from a financial as well as a human perspective, that's all great news. Plus keeps oil prices down and doesn't put any downward pressure on the stock market. So all that's great. NVIDIA shares are rebounding today after taking a beating, a 10% drop on Friday. Tesla shares continue to slide. There are some real systemic issues with that business right now. Shrinking profit margins, laying off people. I guess they're laying off 10% of their global workforce. And their stock looks like it's in bad shape. 10-year Treasury is now at 4.623. It's holding steady there. I'd love to see that get below 4.5. Maybe depending on the news that we'll get this week, maybe that'll happen, or it could go over 4.7. Oil's pretty steady at 43.23 at the moment. What to watch this week? Nothing really going on today. Tomorrow, we get both the services and the manufacturing PMI numbers. Wednesday, durable goods, that's not going to move the market. But on Thursday, got the GDP number coming out. We're expecting that to be at 2.2%. Initial jobless claims, we're expecting 215,000. Both of those potential market movers. And then Friday, we have the PCE numbers coming out. That's personal consumption expenditure, core PCE, consumer sentiment, and personal income is forecasted to go up 0.5%. So we're going to get a pretty good handle on where the economy is. Strong economy. It's great news for all of us. Not good news when it comes to the future of interest rates and Fed cuts. We'll talk more about that. Last week's heat map in the tech sector, whole lot of red. There was kind of a flight to safety. Consumer defensive or staples, they were up. Financials were up on the week. Utilities were up. Look at Tesla for the week, down 11.84%. The 1-year heat map looks fantastic. See a green. So we've had a pullback, but still some pretty impressive numbers. Meta up 125%, Alphabet 49%, Amazon almost 70%, NVIDIA 190%, Broadcom 91%. So we've had some fantastic opportunities. Market breadth for the week kind of says it all. We like to look at the number of stocks hitting 52-week highs versus lows. On the New York Stock Exchange, 45 new highs, 173 new lows. Not good. Worse on the NASDAQ, 106 hit new highs, 627 hit new lows. Biggest winners, United Airlines, United Health Group, Paramount, Globe Life, Genuine Parts, American Airlines, Wells Fargo, Elevance, Southwest Airlines, and M&T Bank. So the airlines had a great week. United was up 22% on a nice earnings beat. Yields are creeping higher. Why? Because inflation is creeping higher. So we thought we had inflation whipped. Yeah, not so fast. And now the Fed's position is higher for longer. This is the length of time from the last hike to the first cut, been 10 months. The average is 8 months. So they have definitely held true to their word. Earnings misses are a disaster. So if a company beats earnings, the average gain is 1%. If they miss on earnings, stock drops 11.7%. Wow. CEO confidence on the uptick, so they're expecting business to get better. That's a good thing for all of us. Philly Manufacturing Survey had a huge beat. So manufacturing picking up, at least in the Philadelphia area. Money is flowing out of mutual funds into ETFs, exactly as it should be. Mutual funds are garbage. We are awash in liquidity. We are now sitting on $5.968 trillion in money market funds between institutions and retail investors. Market survey continues to get less bullish. So in the last 4 weeks, bullishness has gone from 50%, 47, 43, we're down to 38%. And bearishness, which is historically at 31%, is up to 34%. All due to a couple of bad weeks in the market. Probabilities of a rate cut in May, forget about it. 96.25% we hold. June, 82.43% chance that we hold. There's about a 50-50 shot for a rate cut in July, a 90% chance we'll see a cut in September. So that's a little dicey because we're getting really close to the election. And I know the Fed doesn't want to look political, but I think that's the way it's going to work out. Huge earnings week this week. The biggies starting tomorrow: Tesla, Visa, Pepsi. On Wednesday, AT&T, IBM, Meta. On Thursday, Intel. On Friday, Chevron, ExxonMobil. So 42% of the market cap in the S&P 500 announces earnings this week. 1-year returns is communication now with a pretty steady lead at a return of 47.50%. Followed by tech, 36.71. That's had a big pullback. Financials, discretionary, industrials have all done pretty well. Energy, materials, double digit. Healthcare, staples, those are basically checking account returns. REITs and utilities are down for the last year. Take a look at the charts. See if we get some insight there. Hope all of you had a fantastic week. Ski season starting to wind down. I went up skiing on Sunday. It was mushy. It was mushy. All right, so let's look at the SPX. Temperatures are getting in the 50s now in the mountains. So we had this lovely run crossing above that yellow line, which is the 50-day moving average. Then we crossed below. Been sinking ever since. Today, we're having a nice up day. Let's hope that this continues. I think a lot is going to have to do with interest rates based on the economic news that comes out. On the Qs, this is big tech, same kind of picture. So an encouraging day today. After getting throttled here for about a week or so. So maybe things are starting to turn around. It is going to be all data dependent and earnings dependent this week. All right. So I hope you have a fantastic week. I will be seeing all of you next week. Stay safe, be blessed. Bye for now.